Yo, what's going on, guys? We made it through the week. We got this long ass weekend. As we all know, remember what happened last time we had a long weekend? We know what happened the next week, right? So yeah, pretty strange week. Hammered down, news, FUD, this, that, the other. And then you got this iceberg lettuce popping in out of nowhere today. Iceberg, whatever the hell you call them. We'll touch on that for a minute. That was crazy. That was just weird. I mean, try a little harder, but we'll hop into that in a second. I found a couple other doozies here today, you guys. First of all, nobody blow any fingers off this weekend, okay? You're not going to be able to check your apps 197 times come Tuesday morning if you're missing some digits. So everybody, light some sparklers, a couple smoke balls, but don't get into that heavy arsenal stuff and blow a couple digits off, okay? So be safe. This thing here, this was insanity. I ran into this son of a gun. I don't know where I ran into it, but I ran into it a couple hours ago. But this is nuts. Witness drops bombshell at House hearing. Hedge funds are getting 100 times leverage on crypto. This gets good. But this is Alexa Goldstein, Director of Financial Policy at the Open Markets Institute, testifying on June 30th, okay? So this is absolutely insanity here. Yesterday, the House Financial Services Subcommittee on Oversight and Investigations held a critically important hearing on the crypto craze that has engulfed U.S. financial markets. The hearing was titled, America on Fire, Will the Crypto Frenzy Lead to Financial Independence and Early Retirement or Financial Ruin? Okay, so they go in a little bit here on, what's her name there, the Congressional Tom Emmer, blah, blah, blah. Didn't take long. Okay, so here we go. Goldstein was asked by Congresswoman Maxine Waters about a survey released earlier this year by accounting firm PwC, which indicated that 1 in 7 hedge funds have 10 to 20% of their total assets under management invested in crypto. Equally frightening, the same survey found that 86% of the hedge funds currently investing in crypto intend to deploy more capital by the end of this year. Goldstein responded that the public has already witnessed this year the collapse of the family office hedge fund Archegos, which demonstrated that when banks have prime broker relationships with hedge funds, it can create losses at the banks which hold federally insured taxpayer backstop deposits. Large global banks, this cost them $10.4 billion. Remember that with that was involved in that. But then down below here, if hedge funds, this is her written testimony here, if hedge funds get farther into crypto, they don't care about direction. They'll go long, they'll go short, they can use leverage. There are lots of cryptocurrency exchanges like FTX and Beyonce, whatever the hell that name is. I have an account there and I just slatter that thing every time. I'm kind of stupid, so bear with me. And many others that allow people to use insane amounts of leverage, 100 times to 1 leverage. Jesus. So what happens if a huge number of hedge funds have prime brokers relationships with too big to fail banks and all happen to be in similar crypto positions, whether it's long or short, and there's massive volatility in the market? They may have to sell some of their other assets. It may lead to margin calls in their non-crypto assets, which could lead to forced liquidations and sort of a rebound to the banks themselves in the form of counterparty risk. Okay? Down here it gets even better. Waters asked Goldstein if there's any transparency on which specific hedge funds held the large positions in crypto and who their counterparties are. Goldstein responded, the crypto is not currently reported to the 13F forms that hedge funds are required to file with the SEC, so regulators are currently totally in the dark. Darkness and 100 to 1 leverage? What could possibly go wrong? And then just a couple more key pieces to this one, you guys. Goldstein rounded out the potential doomsday scenario in a written testimony to the subcommittee. Goldstein explained how the mega banks on Wall Street, which provide margin lending and securities lending to hedge funds under a program they call prime broker services, and themselves taking a growing presence in the cryptocurrency market. Too big to fail banks are also a growing presence in the cryptocurrency market. Goldman Sachs plans to open a cryptocurrency trading desk. BNY Mellon allows its clients to hold Bitcoin as of February 19th, Wells Fargo will professional manage cryptocurrency funds for qualified investors. Morgan Stanley, blah, blah, blah. Let's get down to the bottom of this. In addition, the concentration of particular cryptocurrency assets into a small handful of addresses raise concern about power concentration. To take one example, there are several very large whales in the Dogecoin cryptocurrency, including a single address that holds 36.7 billion Doge. Hello? Or some 28% of total Dogecoin. 28%. Oh my gosh. Worth more than 8 billion as of February. The top 20 largest Dogecoin addresses held half of the crypto. Good night. Some cryptocurrency exchanges have reportedly been exaggerating their volumes to attract more participation. A 2019 study by Bitwise Management suggests that 95% of Bitcoin's traded volume displayed on digital asset price and volume aggregator CoinMarketCap.com is either fake or non-economic in nature. Jesus. A 2020 study in the Journal of Finance argued that a single market manipulator likely fueled half of Bitcoin's 2017 price surge that pushed the price close to 20 grand. Remember that back in 2017? For this alleged manipulation, Bitfinex and Tether faced a class action complaint seeking a total of $1.4 trillion in damages and are under investigation by federal and state regulators. Oh boy, there's a couple more pieces of this, you guys. I'll pop that in there, but that's pretty crazy. Just to think, kind of scares me out of the crypto thing, you know? Who the hell knows? Old Luke Lloyd over here, this was great. He was on with Chucky Payne here. The apes are the smartest guys in the room, and nobody is giving them credit. Robinhood's best days are behind them. Boy, isn't that the truth, right? I like to buy companies where the best days are ahead of them at C. Payne. Let's take a quick listen.
Luke, those are some big numbers. F9, of course, helped AMC shares pop on Monday. How important is it, though, obviously, for people to keep flocking to the movies, to keep those shares, the AMC shares, sort of buoyant until we see some sort of changes or modifications to the business model?
Yeah, Charles, look, man, here's the deal. When you look at GameStop and AMC, they have exceeded my expectations. I was always concerned with how long the apes can really have diamond hands before they start to take profits. Well, I think they proved everyone wrong. Maybe they actually expected from the get-go that AMC would issue more shares at a higher valuation and use that cash to reinvent the company. If that's the case, I was not expecting that, and I give them a ton of credit. The apes are the smartest guys in the room right now, and nobody is giving them credit. What the apes need right now is for the management team of AMC to continue to deliver and communicate to get momentum back behind the stock, and one of those ways is to continue to drive people back to the movie theater.
Absolutely. Hey, Robinhood, they filed their S1. They're going to go public. 400 pages. It's a thick one. One of the reasons, Luke, 73 pages are devoted to risk. They say 17% of the business in crypto, 81% of the business is from order flow. I mean, and of course, a huge chunk of that is from Citadel. And by the way, speaking of apes, all my ape friends, you know what this really means? You are not the customer. 81%, you are the product. So listen, I wish him well. Any company that goes public, I wish him well. I'm not a buyer, though, of the stock. Would you buy it?
Yeah. Charles, no, I'm not a buyer. The best thing about Robinhood was that it brought investing to the tiny little guy on Main Street. Now they have offended the little guy on Main Street. Not only that, but their business model doesn't make any sense right now. They have $80 billion in assets and are making $2 billion a year in revenue. That means they are making 2.5% off the money you have with them, whether you directly pay for it or indirectly pay for it. They don't even manage money or give you investment advice. And then what people are starting to realize is that once you cross above about $5,000 or $10,000, there are many other better brokers out there. Charles, I only buy companies where the best days are ahead of them. Right now, Robinhood, the best days are behind them.
Luke, those are some big numbers.
Robin Hood. That was pretty cool, though. A little AMC talk there. Yeah, now this, you guys, this is about 1 minute. I'm only going to play half of this, but this is back in 2015. Listen to some of Kenny Griffin's wives. This is about his divorce. His wife wanted $1 million a month. This is only about a minute long, but listen to their expenses per month. Just listen to this.
It's Ken Griffin, the billionaire hedge fund manager and the founder of Citadel. He's battling his ex-wife, Ann Diaz, in court over the terms of their divorce. Now, in a recent filing, Ann says Ken's income is more than $100 million a month, or $68.5 million after taxes. That's $2 million a day, or around $91,000 per hour. Now, a spokeswoman for Griffin declined comment, but this is all part of a dispute over child support. Ann is asking for $1 million a month in child support. Ken says that's excessive and includes things like private jets, $450,000 vacations, and $6,800 a month for groceries that are mainly for what he calls Ann's opulent lifestyle. Now, Ann says that $1 million a month is what the couple spent during their marriage, and Illinois law requires child support to match the family's spending during their marriage. In her filing, Diaz admits, quote, "It's a silly exercise to pretend the day-to-day living expenses for the Griffin children even remotely resembles the norm." And she says, but typical American families do not have a father with a net monthly income of just shy of $70 million. That would be maybe the understatement of the year, guys.
Did he just say 6,800 in groceries? That has got to be hard to do. Groceries. He didn't say eating out. Groceries. And they spend $1 million a month. Kenny does like to blow some money. He's got all sorts of houses and weird crap, and he probably should. He's got a ton of it. Jesus, 6,800 in groceries. Yeah, boy. And then here too. Let's touch on this. I want to touch on the Iron Sheik. He's a big AMC guy too. If you guys haven't seen it, I follow him on the old Twitter mobile. But look at this. Just read it. I can't read that or I'll get banned. That is outstanding. Now, you do not want to make the Iron Sheik mad, okay? A lot of you guys probably aren't wrestling fans. I am a monster wrestling fan for almost my entire existence on this planet. You piss this guy off enough, he's going to fire you in the old camel clutch. Look at him. He's got Hogan in the camel clutch there back in the day, probably the 80s. So you do not want to make the Iron Sheik mad, all right? Now, on to this crazy thing. Let's just touch on this because everybody's seen this for the last 12, 14 hours, whatever it's been. Iceberg research, iceberg lettuce, whatever you want to call these guys. This, when I first seen this was, who gives a crap? We got to try a little harder. Wherever this came from, we know they're not, over here. Look at this. Dr. Capital on Twitter. Look at iceberg research, recent short losses. If you look at this, they're they're just not doing very well. And then somebody dug this up too, was on the Twitter mobile, right here. However, Iceberg are not independent research house they claim to be. Their actions and their timing have been calculated primarily to inflict damage rather than facilitate the distribution of research. Talk about some market manipulation here, boys and girls. That was obviously totally blasted on the Twitter mobile by these dudes. Jesus. Just gets thicker and thicker. It's very good for us. We love this stuff. So let's touch on a couple more things, and I'm going to share one thing for you guys, a little homework assignment if you have not seen it. But we got to check in with our Dark Pool guy, right? Dark Pool guy here with your drama-free report heading into the holiday of fireworks. Dog bless the USA. AMC stays strong at number 2 as Tesla pulls the old switcheroo, ending at number 1. Negative 26 bill as AMC continues the uptrend, adding 1.27 bill, ending at negative 18.7 bill over 342.63 million shares. Stay lit, America. That's right. Happy 4th, yo. Thank you, Dark Pool guy. This, you guys, if you have not seen this is, I'm not going to read it. It's not too long, but this will keep you jacked for the next 3 days to the gills. Title of it, Oh Apes, if you knew how bleeped hedgies were. A recap of the past 24 hours. Shout out to old Anna over there. She put some great DD over there on the ARMS AMC stock page too. So that's it, you guys. Another long one. I'll post this in here for your viewing pleasure and a couple other things too. Okay, remember, you guys, do not blow any fingers off. Drink some alcoholic beverages. If you don't drink like myself, that's just fine. Remember, do not piss the Iron Sheik off, okay? Camel clutch is a painful move, and he will take you out. Okay, guys, seriously, happy 4th. Thanks for all the love, comments. I'm not doing much this weekend, so I'll pop in there, interact, and that is about it. We will see you next time. Have a good weekend, you guys. Happy 4th.